Are you going to join Cathie Wood and buy the dip on Teladoc Health again? Talk about that and more on today's show. What is going on, investors? Hopefully, you guys had a great day. Much better day for you if you don't own Teladoc Health. During the regular session, this stock was down 2%. Now, I'm recording this as we're digesting these earnings. Right now, the stock is down 7% to about $131 per share. But these things can bounce around. I tell you what, I've recorded these videos and they've been down as I started the recording, and then sometimes rip-roaring upwards as towards the tail end of the video. So we won't pay a bunch of attention to that, but we will pay attention to it from a technical perspective. We got to dive into the stock from a technical perspective, but also a fundamental perspective. We'll jump into these numbers. I'll be honest with you, every Teladoc Health video I've done, I've been bearish on the stock, and all the time I get comments and I certainly appreciate all the comments that I get here on the channel, and I get these long dissertations about how Teladoc Health is the future of medicine and this, that, and the other. Guys, this is not the future of medicine channel. This is the investor channel, and the way you decide if a company is a good investment is not making these overarching arguments. You come in here and you look at the quarterly numbers, you look at it from a 9-month perspective, you compare that to the valuation, which is at $22 billion, and my bearish thesis on this stock is supported by the fact that there's about 12% short interest on this stock. Not only that, the 52-week high on this stock is $308 per share, and we're currently sitting at about $130 per share in the after hours. Talk about this from a fundamental but also a technical perspective, and sometimes here on the channel those two things can diverge. I cannot like this from fundamental perspective, but from a technical perspective it's saying buy, buy, buy. So we'll talk about all of that and more here on the channel. Well, Teladoc Health's been crushed, so I can tell the sensitivity level of people that have bought this stock over the last year is pretty high, because this stock's down 33%. You look at stocks like Tesla and other Google, these stocks are up 50% or more. Year to date, the stock's down 29%. Now, if you bought this one a while back, before kind of the pre-pandemic, I don't think most people have owned this stock for that long, it's still up 829%, but it's certainly taking a breather over the last year or so as investors are starting to digest these numbers. Now, let's take a look just broadly. So just like a Facebook and a Twitter kind of, produce active user numbers, Teladoc Health kind of does the same thing. We see U.S. paid membership over the last year on a quarterly basis grew just 2%. U.S. visit fee access only, that grew about 8%. I think you'd like to see, considering the valuation and the fact that this company is not profitable, you'd like to see it growing a little bit more on these visit side and the membership side. But what we do see is the year-over-year growth on the number of visits is growing rapidly. So of those practices that have adopted Teladoc, we're actually seeing more people use it. So that is a good sign. We're seeing U.S. visits year over year on a quarterly basis up 40%, despite just the 2% growth on that paid membership side. And we've seen total visits up about 37%. All things being considered, it looks like once people adopt, and we're talking about like businesses and hospitals, doctors' offices, once they adopt this technology, consumers really like it and they actually use it more year over year. They've just got to do a better job at acquiring those customers. Now, what also does Teladoc Health got to do a better job at? Oh my gosh, these financials are an absolute disaster. Here's our quarter ended. 2021 is our most far left-hand column. 9 months ended over here, 20 over 21. Take a look at this. Revenue. Hey, if you just stopped here at revenue growth, you would say, hey, this is a fantastic stock. Okay, we went from $288 million in revenue up to $521 million on the 9-month side. You went from 710 up to 1.5 billion. You're basically doubling your revenue there on the top line. And look, when you've got a valuation pretty high like this one, although it has walked back a little bit as this stock continues to go down, this valuation's not completely as out of whack as it was, say, a year ago. So that the company does have that going for it. And if it continues to move these revenues in the right directions, well, it certainly can start to recover. Now, unfortunately, the rest of this is an absolute stone cold disaster. Okay, we've got cost of revenues coming in at $169 million. That's not that big of a deal, honestly. Okay, you grew this by nearly double. It's not quite a double, and you only increased your expenses by, that appears off the top of my head, I'm doing back of the napkin math here, so forgive me if I'm off a little bit, but that looks like about 60% growth there. You like to see that. It looks like their margins are maintaining. Now, unfortunately, we're spending a ton on advertising and marketing. Take a look. It went from 52 up to 111. So when you double your advertising and marketing, you sure as heck better double your revenue revenue. Now, I understand that Teladoc is a kind of a recurring business model, so they might have to pay a little bit. In fact, they might be underwater on a customer for the first year, maybe even two, hoping that that customer stays with them for a long period of time, and they get this kind of recurring business model, recurring revenue. And so, the sales and marketing a little tricky to understand, and probably not necessarily something that you want to look at from a quarterly perspective as something that's just kind of blowing out the door, but they are spending a lot of money there. They're also spending a lot of money on sales. You went from 23 up to the 62. That's nearly a triple. Technology and development from 29 up to 80 million. Acquisition, integration, and transformation costs, that went down. So a lot of people, last time I was doing videos on Teladoc, a lot of people would make the argument, well, they acquired this company and, Livongo Health, and a lot of those costs are baked in. Well, they went from 25 down to this 4. And so we're seeing the integration of that, but I'm going to show you it actually gets worse. It actually hasn't gotten better. In fact, it's gotten worse. Here's our general and administrative. That went from 59 up to 103. I tell you what, when you're growing your cost across the board here, okay, here's depreciation and amortization. That is a non-cash charge. We can strip that out in cash flow, so I'll show it to you from that perspective here in a second. So we got our total expenses coming in at $582 million. We were sitting at 308 in the previous period. So you take this 521, you minus 169, then you minus 582, and you get a loss from operations coming in at 60 million. Yeah, $60 million. And so last quarter, on a quarterly basis last year, we were sitting at $20 million loss. So we tripled our loss from operations. So yes, we doubled our top line revenue. Yes, the Livongo Health costs are starting to get baked into this company, but it is not helping the loss from operations. In fact, that has tripled over the last year. For the last 9 months, went from about $48 million loss all the way up to $220 million loss. It's just an absolute disaster. And then when you factor in some interest expense, you come down to here from a net loss perspective, you're sitting at $84 million. Guys, there's a reason why the stock just continues to go down. These are absolutely terrible numbers. And it absolutely could be that Teladoc Health is the future. Teladoc Health is going to be a great stock to own one day, but you're too early. It's just like the Cincinnati Bengals fans. It's too early to start talking about a Super Bowl before you even made the playoffs and even won a playoff game. It's the same thing with Teladoc. It is too early to talk about how great this company is going to be when they are losing this much money. It's just too early. And not only that, you're getting obliterated as a shareholder. Take a look at this dilution. You went from 83 million up to 159 million outstanding shares. You basically got doubled. So it's just 50% dilution over the last year. That is going to send the stock down as well. You've got major shareholders like Cathie Wood continuing to buy the dip on this, but if she decides to stop, boy, look out below. The stock would absolutely tank much further than it already has. From a balance sheet perspective, things are fine, okay? This company just more recently went public. It has a lot of public money, a lot of warrants, a lot of financing behind it. It's got plenty of cash. It's got receivables. It's got very few liabilities. So this is a company that can very much survive these types of losses. We just, as shareholders, as investors, we'd like to see these things turn around. Because guys, and you might ask, why do I have this perspective on Teladoc? I just did videos on Google. I just did videos on Microsoft. I just did video on Tesla. I just did a video on Facebook. These companies are growing their top line, maybe not quite this fast, but we're not talking about far off of that. And we're wildly profitable. We're doing billion-dollar buybacks. We've got PEs and price to sales ratios that are actually make a lot of sense and are actually under where the market is. Teladoc Health is nowhere near that, okay? So while Teladoc Health, amongst other healthcare providers, might be a good company, might be a good alternative for a doctor or a practice or a hospital, but in terms of dollar for dollar in the stock market, this is a trash investment. I'm sorry, it just really is. It's a trash investment, especially when you compare it to a Microsoft or a Google. Why would I put $1 into this company that has not scaled up its business? This business is not at scale. I don't know when the revenues are going to turn around. I don't know when the profits are going to start turning into profits. I don't know when they're going to stop diluting me as a shareholder. Whereas I know Google is going to do a buyback and actually reduce the number of shares. I know Apple is going to do the same thing and pay me a dividend. Those are just the facts of the situation. Now, the 9-month ended cash flow statement, which we're on right now, we get to pull down a pretty disastrous net loss number here of $417 million. Last year, we're sitting at $91 million. It's just gone from bad to worse, quite frankly, but we get to add back in depreciation and amortization. That's non-cash. Unfortunately, SEC rules allow you to add back in stock-based compensation, which I think is criminal because, look, these people are not going to work for free. You got to pay them with cash or stock or both. I think this should be counted as cash, in my opinion. You could argue with me as you want, but when we start adding those things back in, guess what? And some deferred income taxes and some interest, look, our cash flows are really nice over here. So from a cash flow perspective, this company's actually looking pretty good. Okay, we went to $110 million worth of positive cash flow. Last year, we're sitting at about $61 million worth of cash flow. All things being considered, it's actually pretty nice from a cash flow perspective. So what I like over at Teladoc is the fact that the customers that adopt the product like it, and it looks like customers like the product. I don't think you'll have any argument with me from there. From a balance sheet and a cash flow perspective, stock's looking pretty good. I tell you what, I like the balance sheet. They look like they can handle these losses. And from actually a cash flow perspective, especially the fact that they don't have to recognize stock-based compensation as salary, so they're basically getting their employees for free from a cash flow perspective, which I think is totally stupid. But if you want to look at it from that perspective, well, it looks pretty good. But these profit and loss are a complete disaster. We've tripled our net loss over the last year, and we've doubled the number of shares outstanding. Those are two terrible things for shareholders. And quite frankly, I think that's what the market is looking at. And how can you argue with it when you look at this stock chart? This stock has been in perpetual decline ever since we started covering this stock. It peaked up over here at $300 per share, and now we're just sitting down here right at 130, which is a key levels of support for Teladoc Health. I tell you what, if you're long these shares, you better get on your knees and start praying that this level holds at 130 and more specifically 120 on this one. Okay, 130 is held numerous times. Now we broke below it just a few weeks ago and we got down to about $120 per share. That is the bottom of a range. If you for some reason really believe in this company and you think that it's going to turn around, these can be buying opportunities down here for you, but chances are you've got burned time and time again because you got this is a daily chart. You got some big red candles and some big red moves on this. I would guess the vast majority of you watching this video bought this stock above $180 per share. More specifically, maybe close to $170 per share. There are a lot of candles up here and there's a lot of volume up above the $170 per share on this one. So you're way underwater. So it takes a little bit of balls of steel to come in here and buy this at what I view as kind of a technical support level between 120 and 130. And you also have to factor in, you could be buying Visa, which had a big drop today and pays a dividend and does a share buyback. Well, you sure as heck could be buying Tesla and Microsoft and Apple and Google and Facebook and any of the major FANG stocks as well, because those companies have been performing very well, far better than a Teladoc Health over the last year. So from a technical perspective, I don't mind this one, but you're at a massive risk. If this stock breaks below 120, look out below. This would be like dropping out of an airplane without a parachute. I think you're coming south of $100 per share on this one. But I tell you what, the further you come down on this one, and then if you ever see any evidence of this loss from operations starting to turn around, well, then you could potentially start making sense of this $22 billion valuation. But right now, this company is sitting at, we'll call it about a $2 billion run rate on its revenue side for a full year. So you're paying about 10 times sales, but unfortunately, I mean, we're nowhere close to being profitable on this one. And I think we're probably at least 12 to 24 months away from seeing any signs of that. The stock could continue to go down. The stock could continue to be diluted. And eventually, this could actually be a pretty good, darn good investment. And it could be down here at the 130, 120 level, but I think you've got some high risk, low reward down at these levels because I don't think they're going to turn it around from a financial perspective. And you got to stop looking what management says. You got to stop looking at the bull case argument, okay? If you've been long Teladoc and you've been obliterated on this, you got to start listening to the bear cases. You got to start listening to people that are telling you an argument that you don't believe in and start to make sense of it, okay? And maybe you got to learn how to cut your losses on a stock like this, because if Cathie Wood decides to cut bait on this one, this thing is going way lower. She is a major, major shareholder. In fact, probably one of the only people on the street that legitimately believes in this company long term. And if she starts cutting bait, well, guess what? Look out below. The stock's going even lower. We're down about 7.5% in the after hours. That's being off 2% during the regular trade. We'll see if the conference call or something can help bring this stock back, but it's looking like dead money at the current moment. That was Teladoc Health. Hopefully, you guys enjoyed this one. Good luck with your investments.